Hello everyone, good morning and welcome to today's lecture. So today we are going to start with the company audit. Okay. When I talk about company audit, what is the basic over here? The company audit is based on the various provisions of the Companies Act, Schedule 3. We will be discussing CARO. Then we will be, going forward, we will be discussing our amendments in that. And then we will move to SEBI LODR. So all these provisions and how they are interlinked and how they are, supporting and, have their impact on the audit in case of a company. Okay. Before I deep dive, let me give you some basic about company audit with respect to the Companies Act 2013. Now, which sections are there that will be, very helpful or that we are going to cover now? Okay. So, if I talk about the sections that we are going to cover for today, that will be section section 139 of Companies Act. Okay, that talks about appointment of an auditor. Then comes to section 140. That's a removal of an auditor. Then comes 141. 141 talks about the eligibility of the auditor. Eligibility, disqualifications. Then comes 142. 142 talks about the remuneration of the auditor. One 143 is the main section which talks about powers and duties of the auditor. When I talk about powers, that what powers are available with respect to an audit of the company. When I talk about duties, what are the duties, reporting duties of an auditor of a company? One 144 talks about auditor not to render certain service. Remember, in management consultancy service, we saw there was certain kind of service that in case of a company, auditor is not allowed. So that is the same section. One 145 talks about signing of AR. When I say AR means audit report. 146 talks about auditors to the general meeting and its relevant provision. So 146, provides auditors a right to attend the general meeting. One 147 is a punishment penalty clause, punishment for contraventions. One 148 is with respect to the central government to specify certain items with respect to the cost audit. So it lays down the requirement of the cost audit, where cost audit are required to be carried out and what are the provisions of cost audit. So it's related to cost audit by central government when order is issued by the central government. So these are the basic sections which are applicable for an to a statutory auditor. Other than this, there are certain sections, 138 internal audit, 129 we will be covering. So, sections with respect to the NAFRA, We will be covering all those sections, but as of now, an overview, the sections which are applicable to a statutory auditor in a company. Okay. Now, why I just provided a summary reason, because these are the prime sections that we'll be first focusing on. You will be covering these sections in law, paper 4, also the law. Okay, so now let me deep dive in each of the section over here. And what I will suggest you guys also, I will try to provide this particular detail, each section wise, in a chart form or in a handwritten notes form. I'll ask and I'll request you guys also to please take down the notes at the same time, so that at the time of the exam it will be easy for you to revise and revisit all those notes, and it will be very helpful for you guys. Okay. Okay, so let us now deep dive. Section 139. Section 139 is nothing but appointment of an auditor. Okay. Now, when I talk about appointment of an auditor, there can be 3 types of appointments. One is a first time appointment in case of a company. Then it's a subsequent appointment. And then it's a casual vacancy. Okay. Let's see one by one. Let's talk about first time appointment. Now, in case of first time appointment, there are two categories. One, either it's a first time appointment of a government company or any other company other than government company. So, other than government company and government company. Now, with respect to other than government company, the first time appointment of an auditor is required to be done by board of directors. Okay. The first time appointment is required to be done by board of directors, and that too within 30 days. Okay. Within 30 days, they are required to get or appoint the your auditor. Now, these 30 days are from the date of registration of the company. So, appoint auditor within 30 days from date of registration by board of directors. In case board of director fails to appoint, now board of directors fail to appoint such auditor, then they shall inform the members of the company that they have failed to appoint, and within 90 days an extraordinary general meeting should be convened. Once that extraordinary general meeting is convened, the auditor should be appointed till the conclusion of first annual general meeting. So when board of directors fails to appoint, when BOD fails to appoint within 30 days. Okay. When I say fails to appoint, it is within 30 days, the time period that is given. Then conduct EGM within 90 days. Okay. Within 90 days. And then appoint your auditor. That auditor will be holding the position till the conclusion of first AGM. Then auditor will hold position till conclusion of first AGM. Okay, from EGM to AGM. That will be the tenure of the first auditor. Clear? So first, within 30 days from board of directors. If board of directors are not able to appoint, then within next 30 days from next 90 days by members in EGM. That was for other than the government company. Now I'll come to the government company. In case of a government company, what is the provision? Now, in case of a government company, what is required to be done is a bit different than normal other than government company. In case of a government company, the auditor is required to be appointed by CNAG. Okay, within 30 days from the date of registration. So appoint within 60 days from date of registration by CNAG. So CNAG is required to appoint within 60 days from the date of registration. Fine. Okay. Now, what if they fail? If they fail, like in the previous case, when BOD fails, EGM is required to be conducted. In case CNAG fails, then appointment is required to be done by board of directors within 30 days within 30 days. Okay. Now, then it pass on to the board of directors. What if board of directors fails? Then, if board of directors fails, then it is required to be appointed in EGM within 60 days. Okay. So, if fails, then this is the procedure. Same way, if fails to appoint, now if they fail to appoint, then we'll go to the next step, that is within 60 days in EGM by members. So in case of a government company, the three-step one. First by CNAG 30, then BOD. Again, first by CNAG 60, then BOD 30, then EGM 60. In case of other than government company, 30 BOD, 90 EGM. I hope it is clear. Now, from where these requirements are coming? Simple. These requirements are coming from, for other than government companies, section 139(6), and for government company, section 139(7). Okay. So 139(6) lays down for other than government company, and 139(7) lays down for the government company in case of a first time appointment. Clear? Any doubt? $90 when the first date is 30 days gets over. In case of other than government company, 90 days or whenever any subsequent steps come, it's from the exhaustion of the time limit of the previous time limit. When the previous time limit has exhausted, from that particular time limit, the next dates are counted. Any doubt? So if you see the wordings of the section is states, it uses the word next 30 days. Okay. Then it uses the word like, okay, in case of a failure in not being appointed in 30 days, then within next 60 days. So the word next is used from where we can, draw the reference that, okay, it's a subsequent to the previous timeline, which is exhausted. Okay, good. Now that was the first time appointment. Now we'll see the subsequent appointments. Okay. In both of the cases, the auditor will hold the position till the conclusion of first AGM. Here, auditor will be holding the position till the conclusion of first AGM. Okay. Now we will see subsequent appointment. Just a minute. Now again, when I talk about subsequent appointment, I'll bifurcate in two categories: other than government company and government company. Okay. Now, when I talk about other than government companies, okay, the procedure to appoint, okay, the auditor is bit different. Now, in case when there is a subsequent auditor, when I talk about means the auditor first was appointed, now it's time to appoint another auditor. Okay, then what is the procedure? The procedure goes that, okay, once an auditor has been appointed, he shall hold office from every first from the conclusion of first general meeting to the sixth general meeting. Okay, and there is a rule 3 which provides how you need to appoint and how you need to what do you say, appoint a subsequent auditor after the conclusion of first annual general meeting, because till the end, first annual general meeting, the auditor has been appointed based on the first appointment. Okay, now subsequent to that, subsequent to the conclusion of first annual general meeting, these provisions will be applicable. Here, what they are required, what is the provision is that first we need to follow procedures of rule 3. Okay, we need to follow the procedures of rule 3 for the appointment. Follow the procedure laid down in rule 3. Okay. Now what such and then what we need to do is, then appointment is required to be done by members in AGM. I'll come in detail what is the rule 3 procedure, but I'll just write it down as of now. Okay, then after following the procedure, appointment is done by members in AGM. Now, once an appointment done, auditor can hold office from conclusion of first annual general meetings to the sixth annual general meeting. from conclusion of first annual general meeting to sixth annual general meeting, to conclusion of sixth annual general meeting. Now I'll tell you. So it's pretty simple. So when the company get incorporated, date of registration. So from date of registration to 30 days, let's say first auditor is required to be appointed. This first auditor holds office till the conclusion of first AGM. Okay. Now from this first AGM to the conclusion of sixth AGM. Okay. From the first AGM to the conclusion of sixth AGM is the subsequent auditor. So that becomes your 5 years. Okay. So from the conclusion of first AGM to the conclusion of sixth AGM, your subsequent auditor holds the office. Okay. And then the auditor is required to file form ADT 1 within 50 days. Within 50 days from appointment. Okay. So that is a basic provision which talks about for the appointment. Okay. Now, when I talk about rule 3, what rule 3 says? Okay. Rule 3 says that when an auditor is required to be appointed, when an auditor is required to be appointed, you need to first, okay, like the board of directors or the audit committee first need to consider the qualification of the particular auditor. They need to first consider the qualification of the auditor. So board to consider the qualification, board / audit committee. So I will write / audit committee because in certain cases it's mandatory to have an audit committee. Wherever it is mandatory to have an audit committee, those decisions will be taken by the audit committee. First, they will consider the qualification of the auditor. Then they may call, if they need it, they may call for additional information. If required, board of directors or audit committee may call for additional information. That depends upon the information that has been provided to them and what additional information they require. Okay. Now, if they are satisfied with the information and qualification, what will happen is audit committee will refer the name to board of directors, and if board of directors agrees on the name that has been suggested by the audit committee, the name will be proposed in the AGM. What if the board of directors do not agree? If board of directors do not agree, then what they will do is they will refer the name back to the audit committee. If they do not agree, they will refer the name back. They will refer the name back to the audit committee saying that we do not agree, please reconsider. And And if audit committee has reconsidered, then they will provide the new name. Okay, so they will refer something. Again, this procedure will start. They will refer a name, board of directors. If agree, then it goes to the AGM. But what if audit committees stick to that particular point? No, I want Mr. X. Board of directors says no, we don't want Mr. X. We want Mr. Y. What happens in that case when they both do not agree? Then in that case, board of directors, like if both disagree, each one will present their recommendation in AGM. Means there will be one recommended name by board of directors, one recommended name by audit committee, and accordingly, the members will vote whether they want to choose the recommendation of the board of directors or audit committee, and that recommendation will be given to the AGM in AGM. If both disagree, then each will share one name. Okay. Now that is the procedure over here for specified under Rule 3. That first audit committee will refer a name to the board of directors. If agree, fine. Do not agree, go back to the audit committee. If audit committee still disagrees, then both will provide a different name. If audit committee is not, if fine to change the name, they will change the name. They will provide a new name to the board of directors, and accordingly the cycle goes. Okay. Now, this is my rule. (3.1), which talks about to consider qualification. Rule 3.2 provides to ask for additional information that board of directors or audit committee can call for additional information. Rule 3 and 3.4 provides that audit committee will recommend a name to the board of directors. Okay. Now, if board of directors do not agree, then they will refer back the name. If they refer back the name, they have a power to refer back in Rule 3.5. If they both disagree, then audit committee has the power to give their suggestion in Rule 3.6, that they will provide a name in the AGM. And in the same way, okay, one name will be provided by board of directors. That is the Rule 3.6. Okay. Now, subsequent to this, okay, there are additional requirements also prescribed in this rule. It says that they need to obtain a written consent. Over here, they need to obtain a written consent from the auditor, a sort of certificate that he has complied with the Rule 5 of the rules. Okay, he has complied. Plus, he need to certify that the criteria of the section 141 are satisfied. So, a written consent and a certificate. Okay, certificate for the compliance of Rule 5 is required to be obtained from auditor. And over and above this, a certificate that the criteria of section 141 are satisfied by auditor. Now, what is 141? Simple. 141 talks about the eligibility of an auditor. Means auditor certifies that I am eligible to be appointed as an auditor. Okay. So that's 131. Oh, 141. Now, this is prescribed under my rule 37 that I need to obtain this particular certificate. Any doubts till now? Any doubts till now? So there is a question. Any prescribed form to be filed with registrar? Okay. Now, the form which is required to be filed with registrar is the ADT one within 15 days. Okay. So that is required to be filed by auditor. Any other questions? Okay. Now, there is one more requirement that says that auditor is required to file form ADT1. Now, in practical scenario, what happens, I'll tell you. When a ADT1 is filed, auditor certifies, certifies and submits a certificate in that ADT1 that the auditor himself as the individual or the firm, okay, is eligible for the appointment and is not disqualified by the act. As per Chartered Accountants Act or Companies Act, both. He certified both, including rules and regulations made under those act. Okay. Then he says that whatever proposal for his appointment has been made is as per the act. Let's say, for example, the proposal for appointment of statutory auditor at that much remuneration for this much period, then that is per act. Then what he says that in that certificate is that the proposed appointment is within the limits or the authority prescribed under the act. Means in case of first auditor, it is not something that okay, board is not doing the appointment, but some other committee is doing. Or in the subsequent case, if you see subsequent appointment, so what is the procedure? First, rule 3 is followed, then it goes for the appointment is done by the members in AGM. Whatever directly board of directors appoint without following any particular thing or without appointment done in by the members in AGM, so that is exceeding the power. So auditor certifies that okay, I am saying that the appointment is done by the authority or within the limits laid down under the under the act. Okay. Then what he certifies that the list of proceedings against the auditor which are ongoing and which are pending with respect to the professional matters. Okay. And the last is that he submits the notice to the registrar for the appointment with the rest of the details in ADT1. Okay. So that is the actually ADT1 that is filed. So I'll show you ADT1. Just a quick glance. I'll show you the form so that you guys can have an idea. Just give me a minute. I'll present on the screen the form so that you guys can have idea how the ADT one looks like and what is the ADT one contains. Just give me a minute. I think there is some difficulty, technical issue. Okay, yeah. So now I'm showing you the form. Actually, the forms, ADT one form. These are the new device forms which are there. Okay. Okay. Now, if you see, this is a form where corporate identification detail, global location of company, name of the company, address, email ID, whether company falling under the class of 139.2, nature of appointment, joint auditors, if there is a category of the auditor, individual or audit firm, income tax permanent account number, name of the auditor. So these are the details of the auditors which are required to be submitted, period for which the appointment has been done, number of financial years to which appointment relates. Okay, whether the appointment is within the limits of 20 companies specified under 3G of 141. We'll see this particular thing. Okay, then specify the tenure of previous appointment. Okay, excluding the previous year having break of more than 5 years. So from if there is a break of more 5 years or more, then excluding that. Just a minute. Okay. Then I think my screen share disconnected. Sorry. Okay. Yeah. Okay. So this was the basic, ADT one form which is there, which provides the detail that is required to be filed. Okay. Now, other than this, now this was the ADT one and the Rule 3 procedure that we saw. Okay. Now I'll see the subsequent procedure for in case of a government company. In case of a government company, it's pretty simple. It's pretty simple compared to what we were seeing other than government company. Okay. In case of a government company, appointment is required to be done by CNAG, okay. Appointment is done by CNAG and that too within 180 days. Within 180 days from the commencement of financial year. Okay. From the commencement of financial year within 180 days, that auditor will be appointed by the CNAG. Simple. There is no complication in this. Okay. Now, this is for the government company. Now we'll come to a special point over here. Now that specific and special point is this Rule 5. what is this rule about and what this rule 5 is. So auditor is required to certify, okay, that he has complied with the rule 5. Now, what is rule 5? Rule 5 talks about the rotation. Rule 5 says that in case, in certain classes of company, auditor will be, there will be a break between the auditor's appointment. Like, I'll show you with an example, then it will be very easy to understand. Okay. So there is a section 139.2 and rule 5. They prescribe the rotation requirements. 139.2 and rule 5, they prescribe the rotation requirements. What they say that 139.2 or rule 5, I'll explain in detail. What they say that each listed company okay, or other company prescribed by the central governments and other companies prescribed, okay, shall not reappoint. These both companies shall not reappoint, okay, shall not reappoint an individual and auditor for more than one term of 5 consecutive years, okay, shall not reappoint an individual for a term okay, or for one term or a term, right? I'll let one term for one term, okay, of 5 consecutive years. Of 5 consecutive years. In case of an individual. Now, in case of an audit firm, the audit firm shall not be appointed for 2 terms of 5 consecutive years. That means if an individual is appointed, let's say for example, this is conclusion of first AGM. If an individual is appointed over here, okay, then he cannot be appointed, okay, for a term of 5 consecutive years, for a term more than 5 consecutive years, means till the 5 consecutive years it is fine. Above 5 consecutive years, not fine. Means this is the conclusion of first AGM, this will be second here, third, fourth, fifth, sixth, okay. Now these are the 5 years, okay. Now he shall not be appointed from first AGM till more than 6 AGM, okay. From first to 6, fine. Beyond that, not fine. From first AGM to sixth conclusion of 6 AGM, fine. For the 5 consecutive years, fine. But shall not be reappointed after, okay, after one term of 5 consecutive years. So whenever I say for just a minute, I'll include over here. for more than one term of 5 consecutive years. Same where over there also for more than 2 terms of 5 consecutive years. Okay, more than 2 terms of 5 consecutive years. Now, let's say this was an individual. So 5 years, fine, but not more than 5 years. So if I appoint, let's say for till the conclusion of 7, so this will be 6 years and that will become wrong. That is not allowed. Okay. Now, in case of an audit firm, the wording says that for more than 2 terms of 5 consecutive years. So first of all, you can appoint till 5 consecutive years in the first one. Okay. Now at the 6th AGM, that person is required to be reappointed in case of an audit firm. Let's say, for example, this is an audit firm, not an individual, but a firm. Okay. Now, if this is an audit firm, then till 6th AGM, he can be appointed from the conclusion of 1st AGM. Now, at the end of 6th AGM, he can be reappointment for one more term of 5 consecutive years. Okay, because this is an audit firm, that's why he gets 2 terms. The audit firm gets 2 terms. Then what will happen is from the conclusion of 6th AGM till, okay, then 7th, fine, 8th, fine, 9th will be also fine. This will be 1, 2, 3. This will be 10th AGM, 4 years, and this will be 11th AGM. Okay, 5 years. So till conclusion of 11th AGM, fine. Beyond that, for this particular period, let's say from 11th to 12th, this cannot be reappointment. At the end of 12th, 11th AGM, no reappointment is can be done. Okay. Now, there are 2 things to focus over here. One is it talks about the consecutive years of one term or of 5 years. Okay, 5 consecutive years. And it is applicable to listed and prescribed companies. So 2 things. One, it's applicable to listed and prescribed companies. Another thing that it talks about that it is for 5 consecutive years, means if there is a break, then I need not to apply this provision. If there is a break between, then this provision will not be applied. Okay, clear? Any doubt? So there is one question with respect to, I think, ADT1. When ADT1 is required to be filed? ADT1 is required to be filed within 15 days of, so if you see over here, within 50 days from the appointment. That's the limit of ADT1. Rule 5 I just now discussed. So there is another question whether first auditor is required to file ADT1. Answer is yes. Manini, can you rewrite your question on rule 3, rule 4, just to understand in further detail? 15 days from the date of appointment for ADT1. Yes. So there is one question. Can first auditor and subsequent auditor be same? Answer is yes. First auditor and subsequent auditor can be same, provided if they are falling under the rule 5, they cannot be appointed for more than 5 years, 5 consecutive years. So if he was appointed, the first auditor, then he cannot continue beyond 5th annual general meeting. Okay. Then he cannot continue beyond fifth annual general meeting. Reason because he was there till the conclusion first. Then he was there. He will be there till fifth, not sixth in that case. Because what will happen is that auditor is same. Okay. So he cannot be appointed for 5 consecutive years. Any doubt? Any doubt? See, it's very, very, important to understand over here that how the provision is working. Okay. Now, when I say other prescribed companies under Rule 5, what are these classes of companies that are prescribed? So when I say these classes of company, these are there are 3 classes that has been prescribed. So first one is, I'll as of now remove this particular example and will shift to somewhere else. Okay. First class is my all unlisted public companies. Okay. But they should be having paid up capital of rupees 10 crore or more. Having paid up capital of rupees 10 CR or more. So paid up capital of 10 CR or more. That is a key thing to remember here. For all public unlisted companies. For all public unlisted companies, unlisted public companies. All private companies, private limited companies. Okay. Having paid up share capital of 50 CR or more. Okay. So 50 CR or more is the limit for all private companies. Now, the third class is all other than these 2 companies, all companies all other companies having paid up capital. Okay. Paid up capital below this threshold, like 10 CR or 50 CR. So all other companies having threshold, paid up capital threshold below 50 CR and 10 CR. But they have public borrowings. They have public borrowings from financial institutions, banks, or public deposits, but if they have which includes from financial institution, bank or public deposit of rupees 50 CR or more. Okay, 50 CR or more, then they will become part of this. They will become part of this. So three companies, three categories of companies: unlisted public company having paid up capital 10 CR more, all public limited companies but having paid up share capital of 50 CR or more, all other companies having paid up share capital below above threshold of these two 10 and 50 CR, but they have a public borrowing of 50 CR or more. Okay. Now, there is an exemption to this. The exemption says that one-person company and small company are not covered. Exception to this is one-person company and small company. They are not covered. Clear? So rule 5, the prescribed one. Okay. So the prescribed one is that three categories. In case of unlisted public company, paid up capital 10 CR or more. In case of all private companies, your paid up capital 50 CR or more. In other cases, okay, if the threshold in other cases is less, paid up capital threshold is less, but your public borrowing is more, in that case you will be public borrowing more than 50 CR. In that case you will fall under the under prescribed company. However, if it is a OPC, one-person company or a small company, it will not fall under this particular category of prescribed companies, to which the rule 5 is applicable. To which the rule 5 is applicable. I hope it is clear now. Any doubt? Any doubt? Okay, so just to quick summarize everything what we discussed, okay. In case of a subsequent auditor appointment, what is the procedure? That first you need to comply with the rule 3. Okay, you comply with the rule 3, then appointment is done in AGM by members who will held office from conclusion of 1st to 6th AGM, and the auditor is required to he is required to file form ADT 1. Clear? Now, what is rule 3 procedure? Rule 3 says that board will recommend a name to the auditor. Audit committee will recommend a name to the board of directors. If board of directors agree, fine. If board of directors do not agree, they will refer back the name. If there is a dispute or they both disagree, they both will suggest a name. And the name, when is referred, like, when is given to the board of directors, it is after considering the qualifications and if any additional information that is inquired or asked from the auditor. Okay. Now, over and above that, and a written consent and a certificate is obtained from the auditor that he has complied with the rule 5 and criteria of section 144 are satisfied the auditor. And these both things are also, submitted by the auditor in form ADT1. When I say rule 5 says that it's about the rotation. Okay. Rotation says that for each listed company that is prescribed under section 139(2) and other companies which are prescribed under rule 5, okay, they shall not reappoint an individual as an auditor for more than one term of 5 consecutive years, an audit firm for more than 2 term of 5 consecutive years. Okay. In case of an individual, more than one term. In case of audit firm, more than 2 terms. Not more than 2 terms, basically. Okay. Now, which are these other prescribed companies? That is given in Rule 5. Now, what they say is there are 3 types of companies which are prescribed under Rule 5. One is unlisted public companies having 10 CR or more as a paid up capital. All private limited companies having paid up share capital of 50 CR or more. Other companies, they don't have a paid up capital above the threshold, but they have a borrowing of 50 CR or more. Public borrowing of 50 CR or more. So these 3 types of companies will be covered under the Rule 5, other prescribed companies. And to them, rotation is applicable. I hope it is clear now. So Section 139(2) and Rule 5 is with respect to the rotation of auditors. And this was for other than the government company. For government company, it is pretty simple. Appointment by CNAG within 180 days from the commencement of financial year. I hope it is clear. That was the subsequent appointment. And rotation. Any doubt? No. When I talk about other prescribed companies for Rule 5, over here, all other companies that do not include my government company, because for government company, it's different. Okay. For government company, it is different. So if you see the wordings of classes of company, that includes all unlisted public companies or private companies and all companies having paid up share capital below that threshold, but having public borrowing and public deposit. Okay. Any doubt now? Okay. See, this was the subsequent appointment. Okay. Now, for the government company, the subsequent appointment is given under section 137, 139(7), where they are specifically provided that for in case of a government company, okay, the central government, or where there is a central government is part, interstate, state government, or any such government or authority is there, first auditor will be appointed by CNAG, and subsequent auditor will also be appointed by CNAG from the completion of within the 180 days of the start of the financial year. And hence, accordingly, that is out of this, as of now, out of this particular the discussion we had. Okay. Okay. So now this was my subsequent appointment. Now there is one more thing that we need to discuss. That is the casual vacancy under the when there is a casual vacancy, how the auditor is appointed. Okay. Casual, how the casual vacancy, in case of a casual vacancy, auditor is appointed. Now, there are two, again, there will be two scenarios. One will be other than government company, and another will be government company. Okay. In case of other than government companies, what is the scenario is the auditor is required to be appointed by board of directors. For a casual vacancy, auditor is required to appointed by board of directors within 30 days. Within 30 days. Okay. By board of directors within 30 days, it is required to be appointed. Now, now this in the current case, okay, these 30 days generally, are from the date of the casual vacancy. Okay, are from the date of the casual vacancy. But there is one exception, you can say, or one different requirement over here, that if the casual vacancy, I'll write as of now the CV. Okay, if the casual vacancy is due to resignation by auditor, if that casual vacancy is a result of the resignation by the auditor, then such appointment shall be approved by the company in general meeting. Okay, so board of director will appoint, but that appointment is required to be approved by members in you can say general meeting. They can call an extraordinary general meeting, or whatever it is, general meeting within 3 months from the recommendation of board. Okay, that is to be done within 3 months. From the recommendation by board. Okay, and once the the auditor is appointment, he shall be appointed till the conclusion of next annual general meeting. Okay, he will be appointed till the conclusion of next general meeting, because in case board of directors are appointing, it will hold office till the next general meeting, till the time a full-fledged all the procedures are complied, and for 6 years, or for 5 consecutive years, the auditor is not appointed. Any doubt? So if the resignation by auditor is there, then appointment approved by members in general meeting within 3 months from the recommendation of board. Otherwise, board will finalize within 30 days of the casual vacancy. In case of other than government company. That is section 139. Sorry. Section 139 8 1. Now, another section for government company that says that, okay, in case of a government company, in case of a government company, the casual vacancy is done by pretty simple CNAG, again within 30 days from casual vacancy. Okay. So simple, pretty much simple. Within 30 days from the date of casual vacancy by CNAG. Now, what if CNAG fails? If CNAG does not appoint within 30 days, okay, if casual vacancy is not filled by CNAG within 30 days, then in that case, board of directors within next 30 days will appoint another auditor. Okay. So if CNAG does not, complete the requirement within 30 days, then then board of directors will complete in next 30 days. So that was for the government company. Okay. Clear? Any doubt for the casual vacancy? See, now these are the provisions which are there for the appointment. Casual vacancy appointment can be, done on in front of casual vacancy. Subsequent appointment can be done. There's a rotation applicable over here. Okay. Then there is a first appointment that we saw over here. So these are the appointment, various type of appointments of auditor done. And these are the provisions applicable for those appointments. Now, what I'll focus over here is, remember in professional ethics, we were saying that in one of the clause that auditor needs to see that whether the requirements of 139 and 140 are complied with. I was talking about these requirements. Before appointment, auditor needs to verify whether these requirements have been complied with or not. So for example, if there is a casual vacancy, then whether I am being appointed within 30 days from the date of casual vacancy, or if it is a resignation by the auditor, then whether my appointment has been approved by members within 3 months by the recommendation of board, whether that has been complied. If no, then I cannot accept. If the provisions of 139 or 140 are not complied, I cannot accept the position of an auditor. So these are very important section because they are not only part of the company act, but they somehow linked to the acceptance of an appointment of an auditor via professional ethics, or you can see code of ethics. Okay. So that was my section 139 in detail, talking about appointment of an auditor, which include first, subsequent, casual vacancy, rotation. Okay. So what I'll suggest, guys, is let's take a quick 10-minute break. And after the break, we'll gather back and we'll continue with the next provision and we'll discuss some MCQs also. Okay. Let's take a quick 10-minute break. Hello, everyone. Welcome back. Okay, so let's continue the discussion. We were discussing section 139 till now. Okay, now we'll be going to section 141. That is the qualifications for an auditor, for an appointment of an auditor. So, what are the basic qualifications that are eligibilities and who are not eligible to be an appointment for an auditor? It's pretty much simple. There is no difficulty in that. So I'll write it down. Section 141. Okay. After this, I'll cover section 140, and in between, I'll cover the MCQ also of both the topics. Okay. So section 141 provides the qualification, eligibilities, and disqualifications to be an auditor. Now, what section 141 says? Section 141 says that a CA in practice or partner in firm can be appointed as an auditor. That's a plain thing. That 141 says that who can be an appointed auditor? That is CA in practice or a partnership firm for that. Okay, that is pretty much understood. That in same way we saw in professional ethics also that like corporate form of accountancy is not allowed or not eligible for be appointed as an auditor. Okay, so a person shall be eligible for appointment only when he is a chartered accountant, provided it can be a firm also of chartered accountant practicing as a for accountancy and audit. So auditor can be only chartered accountant or firm, okay, where majority of the partners are practicing in India. So for the firm, it should be majority partners, okay, are practicing in India and qualified for appointment. Then only firm will become eligible for appointment as an auditor. Now, the firm which has other partners also other than the CA in practice, okay, uh, shall not be permitted. Like those partners will not be permitted to sign on behalf of the firm. So what will happen is auditor can only be CA or a firm with majority partners practicing in India or qualified for appointment, and they shall be chartered accountant. So to sign the report on behalf of the firm, they shall be chartered accountant. Now that is pretty much basic 141 one of the act. Okay. Now subsequently it says that where a firm is there, LLP is part of that firm. So whenever we talk about a firm, it includes LLP. Okay. So firm including LLP also can be appointed as an auditor. Okay. Now, this was the basic who can be appointed as an auditor. Now, there is a list prescribed. There is a list prescribed under section 141.3, which says that these persons are not eligible for being appointed as an auditor. So these persons are not eligible for appointment. Simple. As an auditor. What are these persons? One, it's a body corporate. Body corporate cannot be appointed as an auditor other than LLP, because LLP is already covered above. Second, an officer or employee of company. They are also not eligible to be appointed as an auditor. Person who is a partner or who is in employment of an officer or employee of the company. So if a person who is either partner or in who is in within employment for officer or employee of company. Okay, so if he is either partner of officer or employee, or he's in employment of officer or employee of the company with officer or employee of the company, then he will be not eligible. So if he is partner or who is in employment of the above, then not eligible to be appointed. Okay. Then a person who is a relative or partner, okay, who is a relative or a partner, okay, uh, provided that in there are conditions for the relative or partner. So a person who is relative. Now when I talk about a relative means there is a definition given: members of HUF, like their spouse, related in other prescribed ways. So there's a definition given for the relative under Companies Act. That definition will be applicable over here. Okay. So if you want to refer the definition of the relative under Companies Act, it's section 277 of the Companies Act, which prescribes who relative means what. Plus there are certain rules also that are given. So you like section 277 covers everything. Okay. Now a person who is a relative or partner okay, provided the person who is a relative or partner, there are conditions given, like if it is a relative and partner, and the conditions are holding, okay, any security, holding any securities of the company or interest, securities or interest in the company, okay, in the company, face value not exceeding 1000 or a limit that is prescribed. Now for this particular purpose, the limit that has been prescribed is exceeding 1 lakh rupees. Okay, so the limit prescribed is rupees 1 lakh. Okay, holding security or interest of face value, okay, of face value not exceeding 1 lakh. Now we are covering here face value. Of shares. And if he is holding more than 1 lakh, he will fall under this category. Okay. So a person who is a relative or partner holding any security in the company of 1 lakh or more, basically, then he will fall under this particular category. Second, if that particular relative or partner is in debt to the company, is in debt to the company, okay, or its subsidiary, holding, associate companies, okay, or subsidiary, holding, associate, okay, or you can say subsidiary of such other holding of this holding company, okay, subsidiary of holding, okay. So you can say sort of, on the same level, peer subsidiary we call it. So if it is a, in debt to the peer subsidiary in excess of rupees, a limit that is prescribed under the rules. Now, what is the limit that has been prescribed? Okay, for the purpose of this particular clause, a relative or partner who is in debt for amount more than 5 lakh rupees. So the prescribed limit is 5 lakh. Okay. Then he will not be eligible. That particular person whose relative or partner it is will not be eligible to be appointed as an auditor. Okay. Then the third criteria for the particular relative or a partner. Okay. The third criteria is that has given guarantee. The relative or partner has given a guarantee, okay, or provided any security in connection with the indebtedness, or has provided any security in connection with the indebtedness of any third party to the company. So we'll keep, as of now, keep it provided as any guarantee or any security. Okay. Or it includes everything: subsidiary, holding, associate, subsidiary of holding company. So subsidiary, holding, associate, subsidiary of holding. So if he has provided guarantee or any security to the subsidiary, holding, associate, subsidiary of holding above a prescribed amount, then again the person whose relative or partner he is, that person will not be eligible for appointment as an auditor. Now in this case, the limit is again 1 lakh rupees. Prescribed limit is 1 lakh rupees. Okay. So in all these cases, the person whose relative or partner is, that person will not be eligible for appointment as an auditor. So I'll write it here. A person who or his relative or partner. Okay. So person himself, his relative or his partner, if they have given any such thing, or they have, security, guarantee, indebtedness, then they will not be eligible for being appointed as an auditor. Clear? Okay. Then the next is that a person or a firm who has directly or indirectly business relationship with the company or its subsidiary, holding, associate, holding of associate, or subsidiary of such holding company, then in that case he will not be eligible for appointed as an auditor. So person or firm has business relation with company, subsidiary, holding, associate, subsidiary of holding. Okay. If a person or a firm who has a direct or indirect business relationship, directly or indirectly, a business relationship, okay, of such nature as which is like, which is prescribed, then that person will not be eligible for appointment as an auditor. Okay. Now, there are certain things which are there in, prescribed in the business relationship. So when I say business relationship, what that means? It means a transaction of a commercial nature. If there is any transaction entered in for a commercial purpose, it will be counted as a business relationship. So transaction for commercial purpose, that is business relationship. Now there are exceptions to business relationship. So there are two type of exceptions that are provided that should not be counted as a business relationship. So you can say exception to business relationship. Okay. The first is that the commercial transactions which are in nature of professional service. So So if I have provided a commercial, if I have provided, the professional service, those are also commercial transactions, but that doesn't mean I am into business relationship with the company. So that is fine. If I'm providing professional services which are permitted under the Chartered Accountants Act or under this particular Companies Act, then fine, no issue. Okay. Second, commercial transaction which are in ordinary course of business of the company at arm's length price. So which are at uh, which are in ordinary course of business at arm's length price, then those are not part of business relationship. Clear? So in these cases, this will not be counted as a business relationship. This will be normal transaction. This will be out of the purview of business relationship, and the person will not be disqualified here. Clear? Any doubts till now? Okay. So there is one question. Officer, employee of subsidiary, associate, joint venture, or holding company is also included. Now, if you read the plain provision, it says that officer or employee of the company or a person who is in partner or employment of an officer or employee of the company. So here it is not mentioned that it's an officer or employee of holding subsidiary or not. It is plain mentioned that officer or employee of the company. So as of now, it is restrict to the company. I hope I'm clear. So another question is there any limit for the nominal value for this particular transaction? Uh, Answer is no. There is no limit. If any transaction is there of commercial purpose, it will be counted unless and until the transaction fault answer this particular exception. Any further doubts? Any further doubts? Okay. Now I'll present. Let's take one MCQ just to understand in detail. The provision that we are discussing as of now. Uh, Let me just a minute. So this particular question that I'm going to discuss now was asked in previous exam. So you will be able to like this is the same which was asked. Okay. So Raman Limited is a private company. Its balance sheet showed paid up capital of 5 crore, public borrowing of 100 crore. The company appointed Mr. Sham and Company. So paid up capital 5 CR, public borrowing 100 CR. Company appointed Mr. Sham and Company, a chartered accountant firm, as a statutory auditor in annual general meeting held on September 20, 2017 for 11 years. You are required to state the provision related to rotation of auditor and cooling off period as per 139(2) of the Companies Act in case of individual auditor or an audit firm. Okay. Now, first of all, tell me whether this appointment is valid. My first question, whether this appointment is valid. So whether this appointment is valid is fine or not. Pretty easy. Okay. Good, Manini. And why it is not? Correct, Shrishti. Why it is not? Reason also. So why it is not? If you are saying not valid, then why? If it's yes, then why? Both. So if it is valid, then why? If not, then why? Simple. Okay. So in the current case, this is not valid. I'll tell you, not valid. Because Two reasons. One, it is for the 11 years. Number two, okay, now 11 years, can an auditor be appointed for the 11 years? Answer is no. If you see what we discussed earlier is that in case of a subsequent auditor, okay, over here, in case of a subsequent auditor, that subsequent auditor will hold from the conclusion of first annual general meeting to the sixth. So whatever general meeting he is appointed, he can hold office for the first 5 consecutive years. Okay. Now in the current case, what is happening is we are directly appointing him for the 11 years. So that is not correct, first of all. Another thing is rotation. Rule 5. Rule 5 talks about when a company has a paid up share capital of a specified limit. Now, if I show you the rule 5, all private limited companies having paid up capital of 50 crore. But if the paid up capital requirement is not meeting and public borrowing is more than 50 crores, then also that will fall under the category of prescribed company. So this is a prescribed company because it's a borrowing of 100 crores, more than 50 CR. Okay. If the borrowing is more than 50 CR, means a audit firm, okay, Sham and Company, if it is an audit firm, cannot be appointed for term of for 2 terms of 5 consecutive years. Okay, so they cannot be appointed if it is an individual cannot be appointed for the term of 1 consecutive 5 years, 1 term of 5 consecutive years. Okay, so accordingly this particular appointment is not valid. Clear? Any doubt? Okay. Now I'll present a simple question like with respect to what we discussed now. Okay. So let's say for example, ABC and Company, chartered accountants, okay, is there. They want to, the board of directors has proposed their names for appointment of an auditor of XYZ Limited. Now, the signing partner of ABC, that is, signing partner was Mr. A. Now, this signing partner, let's say, for example, ABC Limited was hospital. XYZ Limited were managing hospitals. Let's say, for example, now signing partner A, Mr. A, okay, has done a medical treatment in XYZ hospital. Let's say, for example, this is FY 22-23 appointment, and he has done medical treatment in XYZ hospital in FY 21-22, where he paid rupees 25 lakhs. And this amount, 25 lakhs, was in line with charges of other hospitals. Now, you tell me whether ABC and Company can be appointed auditor of XYZ Limited, considering what we discussed now. Correct, Shrishti. Good. Correct, Manini. Correct. Yes. So whether this will be valid or not. I received two answers. I'm waiting for more answers. I'm waiting for two more. I just only received two answers and waiting for more answers. Come on, guys, pretty easy. Okay. So this is valid because this is not a business relationship. Is not a business relationship. This will fall under the exception. So the exception we discussed, that commercial transaction, ordinary course of business at arm's length price. Now in the current case, hospitals ordinary course of transaction is providing medical treatment, and that's arm's length price. So is this valid? Yes, this is valid. This is perfectly within the exception of the business relationship definition. Clear? Okay. Now we'll see further. So we were seeing that people who are disqualified from being appointed. One of the case was person having business relationship. Now the next is a person or whose relative or director. Okay. Like a person whose relative is a director or is in employment of the company as a director or key managerial person, then that person will also not be eligible for appointment. So person, okay, whose relative is a director or is in employment or is in the employment of the company as director or key managerial personnel. Basically, he's a director or KMP of the company, then that person will not be eligible. So if Mr. X relative is a director, Mr. X will not be eligible for appointment as an auditor. Then a person who is in full time elsewhere, or a person or a partner of firm holding appointment as an auditor, if such person or a partner at the time of appointment or reappointment hold more than 20 companies, audit of more than 20 companies, then that person will not be eligible. So a person who is in full-time employment or a person who holds, okay, at the time of appointment or reappointment, you can say auditorship of more than 20 companies, then that person will not be eligible for appointment. Okay. Now, there is one here detail. Okay, here is one in case of one thing that we need to consider. Now that thing is that when I talk about these 20 companies, there is an exclusion. So when I talk about these 20 companies, there is an exclusion in this 20 companies. Okay, and that exclusion is so these companies will be excluded from the list of 20 companies. So if I want to consider as on date of appointment or reappointment, whether a person is holding, appointment, auditorship of more than 20 companies, I need to exclude these companies. And what are these companies? These companies are OPC, one-person company, dormant, small company, and private companies, private limited companies having paid up share capital, less than 100 CR. If these are the case, then this will become the exception to the 20 companies. Okay. If this is the case, then it will become exception to these 20 companies. So that is the maximum limit. But again, this maximum limit, we need to exclude this. Okay. Then the next is that a person has been convicted by the court for an offense of involving fraud, and a period of 10 years has not passed from that such conviction. So if you have been convicted for fraud and 10 years has not elapsed from the date of conviction, then you are not eligible. Okay. Now there is one more clause that has been added. Okay, that is with respect to my employment. A person who is directly or indirectly renders any service to the connection of 144, like services specified under 144 to the company, holding, or subsidiary, then he will be disqualified. So a person providing, or you can say rendering directly or indirectly services referred under section 144 of the act. Okay, now directly or indirectly to which to company or holding company or its subsidiary, then that person will not be eligible for appointment as an auditor. Okay, now the question comes is, what is directly or what is services that are prescribed under 144? So which are the services which are prescribed under 144 which we cannot render? If we are rendering that service, then we won't be eligible to be appointed as an auditor. Okay, so what 144 says that Section 144. Now, that is auditor not to render certain services. Okay. 144 says that an auditor appointed under this particular, provisions of the Companies Act. Okay. If that auditor provides to the company any service other than the service approved by the board of directors or the audit committee, okay, then he shall be he shall be disqualified and he shall not provide such service. Okay. So basically here what it says that there are list of service specified which cannot be provided to the company being an auditor of the company appointed under the act, provisions of the act. And which are these services? Accounting and bookkeeping. Okay. Second, internal audit. Third, designing and implementation of any financial information system. So designing or implementation of financial information system. Okay. Actuarial service. Then your investment advisory service. Okay. Then investment banking service. Then your like financial outsourcing or something, rendering or rendering some financial activity for the company or outsourcing some financial activity and you are processing that financial activities. So you can say that rendering of outsourced financial service. So some financial service has been outsourced and you are rendering that service. Management services. Okay. And other services that may be prescribed from time to time. So these services cannot be provided. Okay. Now, if any auditor or audit firm who has been performing any non-audit service before, there was a transitional provision that before commencement of that act, then that auditor shall, before the close of that particular financial year, that he should not be eligible for appointment. So that was the one transitional provision with respect to these services, but that is no longer applicable now. Then here in this case, these services are not allowed. And if you provide, you will not be eligible for appointment as an auditor because that will again fall under the disqualifications. Now, whether these services cannot be provided only to company? No. If you provide these services to the company, holding company or subsidiary company, then you will be disqualified. Not only to the company, but holding or subsidiary is also included. Okay. Now we were discussing about the term directly or indirectly over here. Now what does directly or indirectly means? This is a very important term to note. When I say directly or indirectly providing the services, indirectly can be through a relative or through an entity where I have a significant influence. Okay. So if I have a significant influence, or if the person who is providing the service is my relative, then I'm providing the service indirectly. So you need to focus whether it's directly or indirectly, both will be covered. Any doubt till now? See, uh, when you talk about project financing, what sort of service you are talking about in detail, that we need to understand, because it may be investment advisory with respect to the project financing, so whether it's an overlapping or not, we need to understand in that case. Any doubt? Any till now? Okay. See, again, fund, if you're talking about fundraising services, these may fall under to the investment advisory services, because at times we need to see the detailed scope, whether it is something where we are giving an advisory with respect to any of the investment. Another thing is why these services are not allowed. Reason, because of the threat that we saw in the code of ethics. Remember, self-interest threat, familiarity threat, or these threats were there. So if there is something I have performed, and at the later point in time I am only going to audit that particular area, and if the management has performed on my advice and I'm going to audit, then it's a self-review threat, because at one end I give instruction to the management, do this, on the second end I'm going to audit that particular instructions or the act which has been done based on the instructions. So to avoid such kind of conflicts, these services are not allowed. Okay, so there is one question, whether these services are not allowed in the companies in which we are auditing or all the companies. See, these services are not allowed for an auditor not to render certain kind of services. Means if you are auditing that company, if you are statutory auditor of that company, you cannot render these services. Clear? Okay. So now what will happen is, if a person has done any such activity which falls under this particular list, okay, that person will be disqualified. And if he has done after appointment, then he has to vacate his office as an auditor. And if he vacates an auditor as an office, if he vacates the office of an auditor, then that particular vacancy will be called as a casual vacancy. If a person has been disqualified after the appointment, he needs to vacate, and such vacation will be casual vacancy. And that casual vacancy, we saw how we need to fulfill the casual vacancy. Clear? So that was 141, eligibility related to the appointment of an auditor. Eligibility, qualification, disqualifications of an auditor, 141. Any doubt? Any doubt till now? Okay. If no doubts, then I have one question. Okay. Let me discuss, let me bring up that question and we can then discuss. Okay, so here it is. Mr. A was appointed statutory auditor of DME Limited on 1/5/2020 for FY 2021. DMA Limited was listed on NSE. Mr. C, relative of Mr. A, was involved in the business of trading stocks listed on NSE. Okay. During financial year 2021, Mr. C performed the following trades. 1/4/2020, he purchased 1000 shares of DME Limited, 100 face value, 3500 market price. 1/4/2020, again he purchased 900 shares of another company, EME Limited. Okay. Then 30/4/2020, he sold 500 shares of face value 100, 36 rupees, 3600 of DME Limited. Then 10/5, he purchased 600 shares at 3450. There was another company, FNO Limited. On 10/5, he purchased 50 shares. FNO Limited, 11/5, he purchased 100 shares at 5000 and 5050. Again on 36, he sold 300 shares of DME Limited at 3750. Okay. Thereafter, there was no transaction with respect to the DME Limited shares. Now you tell me whether Mr. A is eligible for being appointed as an auditor or not. Simple. Based on this detail, whether Mr. A is eligible to be appointed as an auditor. So we need to see whether, based on the discussed provisions, whether he is eligible to be appointed as an auditor. Okay. Let me go to the provision to discuss. Now the provision says that they should not hold face value of 1 lakh, okay, exceeding 1 lakh. So face value should not be more than 1 lakh rupees, basically. And if you see the basic, the provision, the wording says that, okay, the wording says that a relative of an auditor may hold a security in the company of face value not exceeding 1 lakh. Not exceeding 1 lakh, basically. So if a person is holding securities up to 1 lakh, face value 1 lakh, then it is fine. But if it is holding more than 1 lakh, it is not fine. Okay. Now, if you see the transactions over here, there has been sale and purchase. Okay. And again, there has been sale. Now, at a particular point in time, let's say on this particular point, on this particular point over here, here the face value was 1 lakh rupees. After this sale, the face value reduced to my 50,000, but here the face value increased to my what do you say, 1,10,000. And then if I go below, then there is a sale on 36. Okay, on 36, the face value has again decreased to 80,000. Now, Mr. A was appointed statutory auditor on 1/5/2020. If you see 1/5/2020, the face value was 1 lakh. So at the time of appointment, on 1/5/2020, the face value was 50,000 because the transaction of sale has occurred on 34. So the face value was less on the date of appointment. So on the date of appointment, no issue. Subsequently, the face value increased. Okay. Subsequently, the face value increased. But there is a special provision in the rule which says that in the event of acquiring any security or interest by a relative above the threshold, okay, then 60 days will be given to that particular relative to take the corrective action to maintain the limit as specified above. Okay, so 60 days time limit will be provided to have the corrective actions. And if you see over here, this particular transaction has been completed within 60 days. So from the date of appointment, or basically from the date of acquiring additional shares, within 60 days that has been rectified. And hence, an appointment of Mr. A is valid. Clear? So this corrective action has been taken within 60 days. And hence the appointment will remain valid. So you need to check the conditions at two places. One, at the time of appointment, whether the appointment is valid. Second, whether the auditor is required to vacate the office because of the casual vacancy and the disqualification. If yes, then our answer will work accordingly. In both of the cases here, appointment was valid because on the date of appointment, the shareholding was only 50,000 face value. Number two, subsequently, within 60 days, the corrective actions has been taken and the appointment will still remain valid. Clear? So I'll check on two times. One, face value on date of appointment, which is rupees 50,000. Second, continuous checking, but in case there has been breach of threshold, after appointment, okay, in case there has been breach of threshold after appointment, okay, then the corrective actions to maintain the limit shall be taken within 60 days of acquisition. So you will be given 60 days to maintain threshold or to take corrective actions. Clear? Any doubt? So in the current case, appointment is valid. Any doubt? Okay. So this is how we are required to see the compliance with the provision of 141, that is my eligibility and the disqualifications for an auditor. Okay. Now, there is one more section that I want to discuss that is 140, removal of an auditor. If there is a removal, like, if there's a removal of the auditor, then what is the provisions that is required to be complied with? Okay. Now, when there is a, we are not appointing the auditor, the previous auditor, or the auditor does not wishes to be appointed, then what is the procedure that we will be discussing here? Okay. So what 140 section says, if you don't want to, if the board of director or the company does not wish to reappoint the auditor, okay, then what is the provision? And if auditor appointed under 139, if you want to remove that auditor from his office before expiry of his term, okay, so I'll first take up removal of the auditor. Removal of auditor before expiry of his term. Okay, if a company wants to remove the auditor before expiry of the term, then for that what they need to do is they need to pass a special resolution. Okay, a special resolution after obtaining previous approval from central government. So you need to pass a special resolution after obtaining previous approval from central government. Okay, then only the auditor can be removed. Now there is a manner prescribed under which or based on which the particular prior approval is required to be taken. Now what is the manner? That first an application is required to be filed in form ADT2. Okay, shall be filed in form ADT2. Okay, then the central government will give you approval. After getting the approval, within 30 days, you need to pass board resolution. Company needs to pass a board resolution for removal. Okay, and for removal and for general meeting, board resolution is required to be passed for the removal of the auditor and for the holding general meeting. Okay, and for passing special resolution. And from this, again, within 30 days, this is required to be done. And then within 60 days from central government approval, okay, a general meeting should be held and special resolution should be passed. A general meeting should be hold for passing special resolution. Okay, so that is the procedure that is prescribed. That is the procedure that is prescribed. So first, form ADT2 is required to be filed. Then central government will give you approval. Then within 30 days, what you need to do is within 30 days, you need to pass a board resolution. And then within 60 days from days of central government approval, you need to pass the special resolution by convening AGM, or not AGM, but any general meeting. Clear? So that is a procedure for the removal of an auditor before expiry of his term. Now, this procedure is prescribed under Rule 7. Okay. And that special resolution and this requirement is prescribed under section 141. Okay. Now, that was removal of auditor before expiry of his term. Removal of an auditor before expiry of his term, section 141. Now, another is, what if the auditor is resigned? Okay. Just one more thing over here, that in this case also, an opportunity of being heard should be given to the auditor. Opportunity of being heard is to be given to auditor. Okay. Now, second, what if there has been resignation by the auditor? Okay. The auditor who has resigned from the company shall file within 30 days a statement, okay, to the registrar to provide the details. So now we'll see resignation by auditor. Okay. Now, if the auditor, do not wish to continue, then he needs to file a statement with registrar. Now, that statement will contain reasons for resignation. Okay. Now, that is to be done within 30 days. Now, this is to be done within 30 days from the date of resignation. Okay. And sorry. I'm sorry. Yeah. Okay. And in case of a government company, if there is a government company, okay, then such statement is required to be filed with CNAG indicating the reasons. So, if government company, then with CNAG, that why the auditor is resigning, the resignation for the resigning. Okay. Now, if the auditor do not comply with this provision, like if he does not file a reason for resignation or a statement, okay, then he will be liable for the penalty. In case of failure by auditor, then the penalty will be rupees 50,000. Or amount equivalent to the remuneration. If you do not comply with this provision, you will be charged a penalty of rupees 50,000 or amount equivalent to the remuneration, whichever is less. Now, if this is a continuous failure, okay, means still there has been, a failure, like continuous failure. In that case, the penalty is rupees 500 per day for, each day of such failure continues, maximum of rupees 2 lakhs. Okay. For continuous failure or continuing failure, the penalty is 500 rupees, 500 rupees per day. Okay. Or rupees maximum 2 lakh. So these are the penalty amounts. And this statement is required to be filed within 30 days from the date of resignation. This is prescribed under section 141 2. Sorry, 142. Okay. Resignation by an auditor. Earlier we saw removal before the expiry. Now we saw resignation by an auditor. Okay. And the penalty is covered under section 143 of the Act. Okay. Now this was with respect to the removal and resignation. Now the next part is if you do not wish to reappoint. Okay. Do not wish to reappoint the retiring auditor. Not reappointing the retiring auditor. So if you do not wish to reappoint the retiring auditor, what is the provision then? Okay. If a retiring auditor is not required to, we do not wish to appoint a retiring auditor, reappoint the retiring auditor. Okay. In that case, a special notice is required to be given for a resolution at annual general meeting. So first you give a special notice. Okay. For a resolution at the general meeting, annual general meeting. Now, this notice will consider or will say that the person other than the retiring auditor or the retiring auditor do not wish to be reappointed in the current case. Okay. Now, this particular case is not applicable. There is an exception to this notice requirement. Okay. There is an exception to this notice requirement where the retiring auditor has completed a consecutive term of 5 or 10 years as the case may be. So exception is if retiring auditor has completed tenure under rotation. Okay. Returning auditor has completed tenure under rotation. In that case, you cannot reappoint the retiring auditor, and you need to appoint another auditor. So special notice is not required to be given. Otherwise, for each of the case where you do not wish to reappoint the retiring auditor, special notice for the resolution at AGM is required to be given. Okay. On receipt of such notice, the company shall send a copy to the retiring auditor. Now, this notice is required to be given to the company, and company will forward to auditor that you are not wish that the company do not wish to reappoint you as an auditor. Okay. Now, once this notice is given for such resolution, okay, then retiring auditor can make a representation to the company. Make a representation to the company. Okay. Now, when I talk about this representation, that should be in writing with a reasonable length. Okay. And and the company shall circulate that representation, okay, to the members of the company, so that the members of the company can know the representation or whatever the returning auditor has to say. So that will then again by company to the members. I'll mention it over here. Then the company will send the representation to the members. Okay. Now, in any of the like if there has been delay by the auditor in case of circulation of the representation or giving representation to the company, okay, then in that case it is fine, because the company has received late the representation. Okay. And what company can do that in that scenario is company can give a notice to the members that the representation has been made by the auditor, but it has been received late. Okay. And that can be shared to the company before the date of the meeting, before the date of the resolution or the AGM it is there. Okay. Now, that representation that has been made, that should be in such nature that it should not be of such words or such detail that it should be appearing that it is incorrect or not appropriate by the auditor. So the representation should not be in such form, okay, that we are trying to not disrepute, but we are trying to bring some problem for the company, or what you say, the facts are not correct or the facts are not true in the representation nature. In the representation, they are exaggerated or they are not what actual the scenario was. So such things should not be covered, or such representation should not be for the advertisement of the auditor. Auditor should not use such representation for the advertisement. Remember, we discussed in the professional ethics also, if any sort of advertisement has been done through this representation, or unnecessary publicity has been trying to obtain from this representation, then that will be violation of the code of ethics. Okay. Now, if the company thinks any such thing is part of the representation, or any such detail is contained in the representation which is not appropriate, then in the case the company can choose not to share the representation with the members. Okay. Now, so in such scenario, when there is a dispute, okay, when there is a dispute whether the representation made by the auditor is within the powers and is appropriate, or the company is appropriate by withholding the representation, then what can happen is they can apply to the tribunal for further hearing of the matter. Now, in that case, what will happen is when an application has been made to the tribunal, or tribunal, like suo moto, okay, is satisfied that the auditor of the company, whether directly or indirectly, has acted in a fraudulent manner, or has abetted or colluded in any fraud, okay, then in that case, what will happen is, I'll write it down over here. Okay. Now, if the tribunal, okay, if the tribunal is satisfied on an application by the company, so if the tribunal is satisfied when he receives the application by a company, okay, that if the tribunal is satisfied that the rights given under this particular subsection, I'll remove this one as of now, the rights given under particular this subsection, that is subsection 4, rights given under this subsection, okay, are abused by auditor, then what tribunal can say that the copy of the representation should not be shared or read out in the meeting. Then they can stop, tribunal can order to not to circulate, to not circulate the representation, or to stop, or to not allow from or to not allow to read the representation in AGM. Okay, means if the tribunal is satisfied that okay, the rights given under subsection 4 of the representation means the representation is being abused by the auditor, or it's of such nature that is appearing to be abusive, or it's not appropriate, then the tribunal can pass an order that do not circulate this representation and do not allow auditor to read the representation in the AGM. That is section 144 of the Act. 140 subsection 4 of the Companies Act. Okay. Any doubt till now? Manini, can you reword your question like 14 days one? Like it's related to which 14 days, if just to understand further. Any doubt? Any doubt till now? Okay, so you're talking about special notice. So for the case of special notice, what is the scenario is a special notice is required to be given, okay, like within the time frame that's there for the special notice, okay, for a resolution at the AGM. So the time frame is that attached to the special notice. So if you read the plain provision of the section, what it says that special notice shall be required as the resolution. Now it does not mention within how many days or what is the time frame. So we understand or we'll connect the time frame that is given for the special notice in the relevant section that will be applicable over here also. Okay. Any further doubts, guys? Okay. There is one more provision left, that is fraud by an auditor. Okay. When on the application to the tribunal or by central government or suo moto, if it has been identified the fraud has been done by the auditor or was part of a fraud, then there are certain things and auditor is then is disqualified, penalties are there. So that provision we will discuss in next lecture, considering the time constraint as of now. Okay, so I'll be discussing that 10 section 140 subsection 5 where the fraud auditor was involved in the fraud in the next lecture. And in the next lecture, we will be covering very important topic and very important section, that is 143, wherein that is covering the part of the audit report. I will show you the live audit report that is there, how 143 is used in real life with the real audit report, and we will discuss the rules accordingly. Okay. So be ready with the rest of the sections I'll cover tomorrow in the next lecture, and be keep revising whatever we had discussed. Okay, please provide your feedback also to us through the app. Reason because it is very important for us to understand whether you are liking it, whether you need something additional. So your feedback is very, very important for us. Okay, guys. So I'll see you in the next lecture. Thank you. Have a nice day ahead.